Hello, good morning, everyone. Welcome to our morning market update. It's Thursday, and it's May the 25th, and it's the fourth day of the week. Captain Obvious. we got a really exciting day for trading today. So today's opportunity is going to be in oil. There's going to be a lot of movement and volatility in oil. Well, how come, you might ask? Well, I would answer because we've got the big OPEC meeting today. Today, what's up for discussion is a production cut extension out of OPEC. OPEC is all the oil exporting nations that are together under one cartel. There's also non-OPEC producers who would also decide whether or not they want to comply at some point, such as Russia is the key one. And there's a few different scenarios we're going to kind of review and what the outcome will be for oil. At the moment, oil is trading $50.82 off the opening price of 50.60. So it's up 22 cents. It's been really excited. It's up almost 6% in the last 5 days. This thing just continues to rally higher on the excitement for today. Well, today is here, so it no longer has to be excited. Oil has been kind of like a kid before Christmas. It can't sleep. Just keeps waking up, hoping to get its present sooner and sooner. It just can't sleep out of excitement. All right, well, the day is here. Let's talk about it. 12 nations will meet. Currently, just to remind you guys, in 2016, the agreement was 1.8 million barrels reduction. Okay, so that's the output cut. There are concerns, however, that not all OPEC members will participate in this deal, primarily Libya and Nigeria. The problem is when most of the countries agree except a few, you know what's going to happen. The countries that agree to cut production, well, that production that was cut will be made up by the countries that don't agree because they'll overproduce. And it's one of those things where all agree or none, and then the deal doesn't happen and it falls apart. So yes, there's expectation. What you need to know in the oil market today is there's expectation for a deal to happen. That's the base case. The case where everyone expects to happen, that's been already built into the market, is at least a 6-month cut or a 6-month extension to potential 9-month extension. That's what's built in. We're actually closer to the 9-month extension point now where the market's expecting it. When the market expects something, dangerous things can happen. When there's an expectation for 9 months, we'll talk about that in a moment actually, but that's kind of the base case. That's why oil's rallied. Let's review the market so far. In Asia, the market's up. Japan's up 0.4%. Hong Kong's up 0.8%. China up 1.4%. India up 1.4%. In Europe at midday, London 0.1%. All right, Paris 0.3%. And Frankfurt 0.2%. So you could see Asian markets really strong, slowing down over the European session and slower and lower gains for that time period. U.S. markets, Dow is up 0.5% overnight, S&P 0.3%, NASDAQ 0.4%, crude oil down 1%. So it got hit a little bit, and we'll talk about why. All right, gold up 0.3. 10-year note, the yield is 2.25% still. All right, yesterday at around 9:30, as we concluded our webinar, we started to notice, our member webinar, by the way, went fantastic. That webinar was all about talking how to set up your trade, how to execute, how to make a plan, how to go from demo to live trading. It was all psychological stuff and preparation material to help you make the leap. I asked a few questions. I polled some of our members, the answers they gave me. We worked with them, and at the end, they realized what the real truth was. It was a very eye-opening moment for a lot of them. I gave them a template to follow to try to hit success from starting out as somebody who's never traded or somebody who's traded and is not having success. That webinar was massive. I think it's going to be a pillar of great resource for a lot of the newer members and somebody who's stuck with trading. You want to get access to it, you got to sign up, become a subscriber. Trade Pro option subscribers will not get that. However, Day Trader Pro and Pro Bundle, which is both the packages together, will get access to it. I got to upload it still. I got to re-record it actually because audio didn't work as well. All right, today's economic calendar. We won't talk about the Fed event yesterday. I'll recap that with the group in the team room. What you need to know, however, is we got natural gas inventory at 10:30 a.m. All right, that's an exciting one, natural gas. I love trading natural gas. We got Kansas City Fed manufacturing survey that comes out at 11. Not really that big of a deal, but it's 30 minutes before the European market close. We got the results of a 28 billion 7-year note auction. If you're a bond trader, that could have some effect. 4:30 p.m. we got money supply. I don't plan to be near the computer at 4:30. And then we also got the balance sheet at 4:30 as well. And Fed's Bullard speaks at 10 p.m. It's probably not in the United States because that's a late time to be speaking. All right. All right, here's the deal. We're going to list the 5 scenarios for oil in the OPEC meeting. It's going to happen today. An announcement or agreement could come out at any time. But here's what you got to look at. There's 5 scenarios. Number 1 is no extension. All right. And these scenarios are listed in the order of least likely. That would also be the least bullish. Least likely, least bullish, down to most likely and most bullish. Okay, so no extension. There could be something that falls apart. Libya, Nigeria, they could say something. Saudi Arabia could get angry. Iraq could pull out. Iran could withdraw. Whatever it is, this is the least likely scenario. Under this scenario, I wouldn't be surprised to see oil drop 10% in one day. I know it sounds really crazy, but so much hype has been built into the market already that withdrawing that hype is going to be disastrous. So these members are going into this OPEC meeting with the pressure that they have to come out with a deal. Remember that. It's not easy on them either. They have to do this and appease the market, and the market's expectations are continuously increasing. It's like having a kid that keeps asking for the next best thing, and you keep giving it to them. You're like, one day I'm going to disappoint this child. What do I do? How do I break it to them? All right, no extension. That's the least likely scenario. The second one is a 6-month extension. The 6-month production cut extension was the base case about 2 days ago. Everybody expected that to be the status quo. They already had a 6-month production. Let's extend it from June to December and reassess. That's out the door now. Now the market's tasted a little bit of the candy and they want more. It's a 9-month extension they're pushing for now. That's become the norm. That's what was expected into the oil price. Overnight, it gave back a percentage point. There had to have been some discussion overnight by the oil finance ministers on, on what to. I just read something totally different in my notes. I'm sorry, it just threw me off. On what they're expecting and what they're fighting for. Some of these oil ministers agree, some of them don't. It's a back and forth job owning process. You guys remember this for me, and I'll send you the link. I wrote a great article on what newswire to use. I've put together a free resource. It gives you up to the minute news with a Twitter feed. I've collected 20 of my favorite news outlets and I put them in one feed for you, and it's totally free. Click the link here in the video, go to it and have a look, because it's very useful for you to add to that. It's a free feed. I highly suggest having a professional news feed, which is a Squawk, a to-the-second audio service that tells you news around the world, breaking news, because the market's really obsessed with news these days. If you're trading oil, you definitely need a news wire, 100,000 million%. All right, that number doesn't exist. 9-month extension is a third scenario for OPEC. So number 3, 9-month extension. That's now, like I said, baked into the market. That's the expectation. A 9-month extension will bring us into the first quarter of 2018. So it extends the production cut further. All right, now if we get the next 2 scenarios, the next 2 scenarios are going to be bullish, right? Very bullish. Number 4 is a 9-month extension plus more countries join. All right, maybe something like, let's see, they talk about, hey, the 12 countries in OPEC have come to an agreement that we're going to maintain this 1.8 million barrel production quota. We're going to go out to 9 months, but in addition to this, we also have Russia joining all these other producers that have agreed, and countries who haven't agreed, like Libya. You know what? We've come to terms with Libya and Nigeria. They're part of the production quota as well. That's going to be a surprise to the market because there's less supply out there, less inventory, more upside for oil. Oil under this scenario could rally 2 to 3% within moments of that announcement. So keep your head on a swivel today. The last one, and the least likely scenario, but by far the most bullish for oil. And I can't tell you what's going to happen, if it's going to be this one or any other one. But the last scenario for oil prices are, and this is going to be super bullish, is they have a 9-month extension. All right, they say we're going to extend the prices for 9 months or longer. If it's longer, then it makes it even more bullish. We're going to extend it out 9 months, and we're going to extend the actual deal, plus we're going to reduce the supply. So we're going to have a production cut and a 9-month extension. If you get that, and if you get more countries than the OPEC to agree, along with Libya and Nigeria, you're going to have a Hail Mary and run this oil trade way up. But I'll tell you this, that's the most bullish. The least bullish and the most bearish is no extension happens. Those are the 2 extremes. It's going to land somewhere in the middle. That's what the market's prepared for. But I'm telling you this at the moment, with the rally we've had leading up to this meeting, professionally, from an opinion of somebody who's traded this for 14 years, somebody who's been around the market that long, has been watching it that long, I got a feeling the market's more prepared, or the more likely scenario is a bit of a disappointment here. All right, something just tells me everyone's geared up for a bullish trade. Everyone's long. All this money's piled on. It'd be way too easy to just whack this trade and take out all those longs and run their stops to the downside, regardless of what happens. It could be an extension. If it's scenario 1, 2, or 3, I got a feeling the market goes down on that news, even though it might be a little bullish, because that's already baked in. You see what I'm saying? A lot of times, and I'll end it off on this, a lot of times traders think that it's the number that matters and what it means. It is not. It's the numbers that matters and what other people think it means. Okay? That's what matters. The number itself has no relevance at all. It's how the market interprets it. It's the sentiment. It's the psychology of the market. That's why your analysis is often wrong. That's why analysts often stink at predicting price, because they're not predicting it based on quantitative metrics. It's all psychological. Okay, guys? It's all psychology in this market. It's all somebody's money on the line. Nobody wants to lose money. Everyone can't make money if nobody's going to lose it. All right, remember that. It's a transfer of wealth. You guys take care. Be careful for this OPEC decision. It can make you a ton of money today. You could make your entire week, your entire month, your entire year. But boy, if you really mess this up, you can get stung in the butt too. So be careful. That being said, you guys join the trading room. We traded together live. We're going to be trading this today. Sign up, tradeproacademy.com. We got a number of packages for you that'll make sense. You get to join our trading room live every day. You get to watch our webinars every Sunday. That's an analysis of the upcoming week. You get a whole bunch of workbooks, videos, course resources, support. You get a pile of stuff and the kitchen sink. So enjoy trading OPEC today. Equity markets are off to fresh highs overnight, but look at volume. It'll tell you something. What it'll tell you is it's a short squeeze. There's no new buyers coming in. There's just shorts getting squeezed, getting their next rung, and prices going up. We wrote a great blog article. Click on the link below as well to check it out, and I'm sure you guys appreciate it. It's a free article. It's great. We talk about options open interest and how it influences short sellers. Take care, guys. Have a great day. I got to go open the room. Remember, OPEC's upon us. Trade careful and try to be profitable. All the best. I'll see you tomorrow. Happy Thursday to everyone. Okay, trade pros, let's do that.